Welcome to the Tons of Industry Show. I'm very happy to have Bill Holter on the show today. He's a returning guest, and I really like speaking with Bill. He's very forthright and extremely out there in terms of what he's talking about. No filters, and that's why I really like having him on the show. It's straight from the hip, and that's exactly how I like it. Bill, thank you for joining us back.
Thanks for having me again, Leo.
I'd like to start with, we're recording this on the 15th, so the phase one deal was just signed and the ceremony just occurred. I don't want to talk about the details of the deal, but I do want to talk about China a little bit. You talk a lot about what's called the credit impulse. Could you explain to people what that is and why it's important for them to learn that concept?
Well, the credit impulse basically is whether or not credit is expanding, whether it's flat or whether it's declining. And in a fiat system, you always have to have credit, always has to expand. It goes back to Richard Russell's inflate or die. And what we've seen for the last 10 plus years since the 2008 crisis has been one central bank after another. You'll see them expand their money supply, expand the sovereign treasury will expand the amount of debt up to a point, and then they pass the baton off to another central bank. The U.S. Fed started in 2008 or 2009 with QE1. They did QE2, and then you had expansive policy through the central bank, a reflation by the Japanese central bank, then the European central bank. Then you had China, and the hope has been that China would again reflate late this past year, hand in hand with the Fed, or this coming year. And at this point, China has reached debt saturation. You're starting to see even state-owned enterprises not make the debt service payments. So the fact that they've hit credit or debt saturation means they're not going to be able to expand credit, and that credit impulse, the wave itself, is not going to be pushing higher. Without a credit impulse, without credit, you will not see economies expand. You'll see them start to decline. And that's what we're seeing now. You're seeing that all over the world. You're seeing it with trade numbers. It's at this point, it's not mainstream yet, but I think people are going to figure out fairly shortly that China, not only not being able to increase credit, increase debt, but also you're starting to see some credits default, which will put the credit system in reverse, which puts the real economy in reverse, and of course the financial markets.
You know, one thing that Sim Zill, the self-made billionaire from the real estate industry, said was that it's very hard to expose the companies and the individuals and all the entities that are levered up right now with very cheap debt and expose their real strength, because they can refinance at these very low rates. It's a lot of companies that just all sorts of activity that in a normalized economic environment with some higher interest rates, it would not sustain itself. So it plays right into what you're saying.
You're starting to see credit sputter. And you mentioned Sam Zell. I think it was 2 or 3 years ago. He came out of nowhere, said he had never owned gold in his life, but was stocking up on gold, seeing this coming.
That's true. And I actually saw that interview. And not only that, but we just had a few hours ago, Greg Jensen, who is the co-chief investment officer for Bridgewater Associates, the largest hedge fund in the world, basically Ray Dalio's deputy, a 45-year-old self-made billionaire himself, say that not only does he believe that gold will go up to $2,000 an ounce, but that it will replace the dollar as a reserve currency. Those are two big calls from a very reputable Wall Street person, not someone that is a bullion dealer or in the Austrian economics per se. I want to switch onto the repo.
Before you go on, I do
Please.
disagree with, and I don't know if it was the exact wording or if you changed it. I do not believe gold is going to become the premier reserve currency. Gold is, I don't see gold as a currency. In other words, I don't see it as used as a currency, but I do believe it will be used to back currencies. I don't think you're going to see I don't think you're going to see any currency convertible into gold, because governments have already found out that if you make your currency convertible to gold, that's exactly what's going to happen. People will convert, and you'll lose all your gold.
Yeah, the exact wording that he used was that foreign entities will have less trust in the dollar and will resort more to gold as a
Okay.
reserve in their central banks and
Okay.
in their governments.
Yeah.
I want to
We
ask
were
you about
asked that.
I want to ask you about the repo operations, Bill. We've seen $400 billion added into the economy since September. Many have seen the correlation between this and the stock market gaining so much. We're seeing that the unwinding of the repo operations or the unwinding of the balance sheet will be very, very slow in 2020. Basically, the Fed is going to keep lubricating the markets as it is right now. And what's really interesting is that the transcripts were declassified from the 2014 meetings, where Jerome
Right.
Powell talked about the fact that the balance sheet being so large is a real problem because it creates an a bond bubble for
Mhm.
fixed income, and then he also said that shrinking it is going to cause a mess at some point, and it was very prophetic because of what we saw in December of 2018. Do you think that's why the Fed is now looking for ways to expand this elevated level of a balance sheet without shrinking it again? Do you think that the repo operations basically will continue on, that they will ease indefinitely, stimulate indefinitely, never taking their foot off the gas for a tightening
Ever
period
again.
again?
Yeah, I don't think you'll. I don't believe the Fed can ever take their foot off the gas from this point forward. We went for years, I don't know, 3, 4, 5 years, year after year, we would hear the Federal Reserve saying that they were going to normalize their balance sheet. And all they did was take, what, 400 or 500 billion off the balance sheet. And you had the financial markets go into a complete temper tantrum at the end of 2018. So they realized they can never shrink the balance sheet. And Powell knew this back, obviously, in 2012 and 2014 when those Fed minutes were taken. So here we are 6, 7, 8 years later. He's running the show, and he already knows that they can't normalize the balance sheet. I mean, he knew then, and obviously end of 2018 showed him he was right. You mentioned that the balance sheet has increased by 400 billion. That is that's not from the repos. That's balance sheet expansion. The repos, theoretically, the repos are supposed to be repaid every night. How do we know that they're not continually rolled over? The fact that the Fed has to come up with, call it $100 billion every single night, otherwise there's a big problem. And I guess yesterday or the day before, they offered 82 billion, and that was oversubscribed. Something has already broken in the background. What or who it is, we don't know, but you can know that something has broken. And the danger, of course, is that it's a big counterparty with derivatives. That will be a problem.
Bill, I want to switch gears onto the election year. We just entered 2020. We're going to have an election in about 11 months here. And I want to ask you about the political environment in the United States. There's a few moving parts right now. First of all, you have a very strong economy, which is what President Trump is running on. It looks like Larry Kudlow just teased they might have a tax cut, or I'm sorry, a tax
But
reform.
Leroy,
Another
why would we have to have a tax cut if it's such a strong economy?
that I'm just I'm
I
just talking
understand.
about
I understand. I'm asking,
well, the same.
everybody's running around saying it's such a strong economy.
Uh-huh.
If it's so strong, why do we need a tax cut?
Yeah,
The answer is because it's not as strong as they say it is.
the analysis that the economy is strong was is very much it's not easy to point to whether or not the U.S. economy is strong because, as Ray Dalio actually says, there are two economies in the United States. There's one economy for the rich, and there's one
Right.
economy for the poor, which he really nicely says that it's hard to look at the United States through the law of averages or through the national statistics, because there are some people that are really suffering, and there are many people that are moving out of middle class lifestyle, whereas other people are really benefiting from the system disproportionately. He talks about the wealth inequality, the income inequality, the opportunity inequality, reforming capitalism, etc. I know we're diverting from the topic. I want to get back to the elections here. We have a clear Republican candidate. We don't have a clear Democratic candidate. Where does everything stand with 11 months here to go, in your opinion?
Well, the country's very divided. I think the real risk socially is that the rule of law does come back, and there are some major arrests. I am on the record that I don't believe that any of the current candidates on the Democrat side, I don't think any of those are going to ultimately be the final candidate. It may be Bernie Sanders, but I suspect someone else is going to come in. And I do think that Trump will be the first impeached president to be reelected.
That's very interesting. And by impeach, you mean impeached by by Congress,
By
or?
Congress, right? He's not going to be removed.
Okay. I want to ask you in closing about the price of gold. We've seen gold having a very strong 2019. Actually, we've seen also silver have a strong 2019. We've seen palladium have an incredible few years here. This is all in the backdrop of a very good stock market with phenomenal returns for the indices, which is very unique for gold to be rallying at the same time as this, and as the dollar index is near all-time highs right now. It's a unique environment, and I want to ask you: do you think that gold is very strong here? And if the dollar has peaked, as many people see because of the trade deal, could we see a phenomenal 2020 for gold and silver?
Oh, I think it's going to be a phenomenal. It'll be very scary. Let's not use the word phenomenal. Gold is moving higher simply because people understand that, or beginning to understand that fiat currencies are credit based. Everything runs on credit, and credit is going to be the biggest problem.
Bill, where can people check out more of your work, your articles, your interviews, everything that you do?
Go to www.jsmindset.com.
Perfect.
MINESET.com.
Bill, Bill the Holter. Thank you very much for being here, and let's definitely touch base in a few months here.
Thank you, Lior.